Are you finally tired of your credit card debt? Credit card debt can be very easy to get into, but extremely difficult to get out of when you start accumulating a higher balance in credit card debt through overspending when you think of clothing, electronics, food, takeout, regardless of what you're doing with that credit card debt. You got in this situation and it's time to get you out of it. When you think about the payments that you're making on the cards, majority of people are making minimum payments, meaning the interest rates are running much faster than we want them to, usually 20, 25, 30%. To get out of debt can be not only incredibly difficult, but it can also be very, very expensive. But let's say you find yourself with a large sum, $10,000, $20,000 in credit card debt. We're going to look at some methods in today's video to help you get out of it and really get back on track managing that debt. Now, first one we look at is debt relief companies. Now, debt relief companies have a couple of abilities that they can do debt management card programs. They can consolidate your debt into one payment. They can make the payments directly for you. They are working on your benefit as your advocate, as your credit counselor, that you can go ahead and work with the creditors themselves, and you don't have to do it yourself. They will do it for you. Couple things to note that are really important here is number one, they do charge a fee. They are for-profit companies, meaning that a portion that you're paying to these debt management programs are probably taking a chunk of that. And of course, for this, you can do it by yourself. If you're willing to sit down, make the phone calls, make the negotiations, you can make it happen yourself with your local credit union, but you can also manage debt and have these calls on your own for free if you're wanting to work with the creditors. Now, of course, you could also look at debt settlement. This is where it comes to more of an extreme situation where is the debtor or is the individual that is lending you the money through the credit card going to get any money at all, or could it be a bankruptcy situation? Could it be something where they're going to forgive a portion of a debt? I have seen this, an example of this. We had an individual that had around $50,000 in credit card debt. They were looking at bankruptcy. They were looking at a couple different options. When you start getting to 50K, the meter on that is running at about $800 a month they were paying on a minimum payment, which is kind of crazy. So we knew debt settlement would be the option. We talked to Bank of America. That is right, it was through BOA. Bank of America settled the credit card debt, all said and done, closed, 22K out the door instead of the 50K that they owned or that they owed. Kind of crazy to think, but yes, they did settle the debt. Now, when we look at number two, using a debt consolidation loan. Now, with this debt consolidation loans, you're borrowing money from a financial institution, whether it's a bank or a credit union. Credit unions do usually have much lower rates. And I know a lot of traditional banks don't do the consolidation or don't do the unsecured or personal lending. This could put everything into one monthly payment. And with that one monthly payment, most of the time you are saving a lot on the APY of the credit cards, and you're saving money kind of on both sides, where if you consolidate it, let's say 5 cards into one payment, that one payment a lot of times is at or about where your credit card minimums are, making it easier because now you're paying a lot less interest. And of course, this is very, very important when it comes to the consolidation loan, is you cannot continue to use those cards. This is where people really truly get in trouble, where let's say you have that $20,000 in credit card debt, you consolidate it to a consolidation loan. 3 to 5 years down the road, you still have that loan because you took it out for 60 months and the loan is almost paid off. And guess what? You have another $20,000, $30,000, $40,000 in credit card debt because you have never adjusted the budget, you've never changed up the spending plan, and now you're in the exact same spot that you were years ago. And I have seen people that have continued this cycle year over year and decade after decade, continuing to go ahead and carry debt because they are not budgeting properly and they are not living within their means. Looking at number three, using a payment strategy. This, of course, is my absolute favorite. When you have the ability, we have 2 big payment strategies. Number one is the debt snowball. Now, Dave Ramsey baby steps. Debt snowball goes from your absolute lowest balance to your highest balance. Every single extra dollar goes to that lowest balance, so you knock it out as soon as possible. Now, this way psychologically works the best because you can see the elimination of debt, where again, if you have those same 5 credit cards, as soon as you knock out one, you know it's gone. Now you only have 4 left. Simple math, counting it down. Now, of course, the way that I prefer and the way that I really teach is the debt avalanche approach. Now, this, instead of going by balances, this goes from the highest interest rate to the lowest interest rate, regardless of the balances that are on there. Now, in the debt avalanche method, when you're making payments, you're getting the most bang for your buck because every dollar that you're putting in excess of that payment is going towards the card with the highest interest rate. Now, in both of these methodologies and both of these payment strategies, you are paying the minimum balance on every single card except the one that you're focusing on and except the one that you're putting all of your money. So this, of course, is going to eliminate the debt much faster. And again, with the two methods, I don't really, I do prefer the Avalanche method, but any methodology and any thought that you're doing to eliminate the credit card debt, kudos to you. Good job, big thumbs up, pat yourself on the back. You know, debit or credit cards are an issue, and it's at the point where you do want to eliminate it. So looking at number 4, it is taking on a side hustle. Not only can you eliminate debt, there's a bunch of different ways to structure it, bunch of different ways to repayment it, going through, again, the Avalanche and going through that snowball method. But looking at a side hustle, you could do this in addition to the full-time job, or even leveraging your full-time job to pick up maybe some extra hours, even if this is kind of short-term to generate some extra income. Because when you think big picture, you only have really 3 buckets for your finances. First one is your income. How much money are you generating? So either that bucket is going to stay the same or that bucket is going to get much larger with the extra hours, with the overtime, with the side hustle, with the side gig, whatever it may be. Second bucket you have is that debt bucket or that liability bucket, where if you can shrink that by paying off the debt, it is going to make a big difference. And of course, the third bucket is, what do you have left? Are you running every single month in the red? Are you negative when it comes to cash flow? Are you having to rely on credit cards just to support the lifestyle you had? Might be a good time to take a good hard look at your spending plan. Where can you cut? Could it be a mortgage? Could it be a car, auto loan, looking at a refinance, looking at a payment, getting the cash flow under control, looking at insurance, really taking a hard look on everything financially, seeing where you can cut and making a big difference. And of course, big scale, taking out a home equity. You can borrow against equity, which I do not recommend to anyone. But if you are looking at either taking a home equity or doing really that debt you're carrying, this can be huge when it comes to larger balances. I have seen everyone, when it comes to credit cards itself, that has run from, 5, 10, 15,000 all the way up to almost 200,000 in credit card debt, which of course, when you start scaling and when you get to those larger numbers, home equity loans make a big difference. Now you have to take that really into consideration and think, because when it comes to the home equity, you are putting your home up as the collateral for the loan, meaning by chance, if for some reason you're unable to make your payment, they are taking the home. It is not just debt collection agencies calling you. It is not just credit cards that are frozen or the limits are expired that you're dealing with. You're looking at a fact that they will take your home. And essentially, regardless of where your equity position is, let's say you have a $500,000 home, you borrowed $50,000 on a home equity, you're not paying any of it back. They are going to start the foreclosure process, even if you have another $450,000 in equity in there, which of course, again, that's going to be really profitable for the bank or credit union if they're getting that for a steal. And the final one we think about here is the budget cuts. That is the way when you're looking to consolidate debt, when you're looking to pay off debt, spending less money will give you more money to pay off in that third bucket. This is where, again, even if it is temporarily, this is where the beans and rice is coming in. This is where the sacrifices are coming in. Cutting entertainment, cutting away meals at restaurants, cutting away your daily coffee, cutting away a lot of things. And I know some of these might be little things, but you know what? If I can cut and save $30, $40 a month, let's say that I spend for a couple trips to a coffee shop, or $100, skipping a meal out to eat where I could supplement it by $20, $30. Anytime I can put $50, $100, $150 on a monthly basis more onto my credit card, again, it might be short term. There might be a point where you can get that. So when it comes to the bottom line, getting out of debt, $10,000, $20,000, $30,000, when you start looking out of there, it's not easy to do, but you can absolutely do it with a little bit of discipline. Looking at a couple of the strategies that we have right here. If you have credit card debt, how are you looking at it and how are you really approaching it? It's funny because one of the things that I do is when I do consolidation loans, when I do home equity loans for debt consolidation, I have the candid conversation with people. How are you going to repay this? What is the plan to repay this? If you're taking on a home equity that is running 15 years, are you going to keep this home equity and this debt sitting around for the next 15 years when you've already had it for the first 5 to 10? You're looking at 20, 25 years right there that you're carrying and trying to pay for the exact same debt, which to me is absolutely crazy, because that could be 25 years with that interest you're paying that could be invested into the market or really taking dream vacations. Regardless, there are so many other things you can do with your life when you do not have debt within there. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.